Hello friends, today I am back to you with my victory series, and in victory series we are talking about the fundamental analysis, and today topic, that is ROI, friends, is really important because as per the various search reports it is said that ROI is really must, and that we will see little later. Friends, welcome to share market SMS, and let's check with return on equity. Friends, first of all, we will see actually in return of equity that what is the purpose of ROI. Friends, the main purpose of ROSI is that it gives a very quick check. Just checking the ROI of a company, it will give you an idea whether to invest in the company or not within no time. Number one. Number two, it gives you an opportunity to make your investment within the same sector or within the or amongst two different sectors. Fine. So this is the fundamental difference, and also ROI tells us that how company is successfully doing its operation and managing the profits along with the investment, right? Let us check, friend, with ROI. The formula of ROI is net profit per year divided by the total investment. So this means when we say per year, it is not calculated on the quarterly basis, it is calculated on the yearly basis only. Fine. ROI 100 means 100 crore is the investment and 100 crore is the net profit. ROI 50 means 100 crore is the investment, 100 crore is the investment and 50 crore is the net profit. ROI negative means 100 crore is the investment, there is loss, and actually the operations of the company has actually bitten into your investments. Now, let us see. So conclusion here is that normally we should say that higher the ROI, the better it is. Higher the return on investment, the better it is. Friends, let us check, a straightforward situation, and that situation is where we, do fixed deposit, provident fund, and mutual fund. Supposing we have invested 5 lakh of rupees. In 5 lakh of rupees, nowadays the banks are giving say 6 to 7%, 7.5%. On an average, it is 7%. So, friends, this means that 7% you will get 35,000 at the end of the year on investment of 5 lakh. This is actually standardized and this is ensured. Similarly, for PF, it is 8 to 8.5%, and mutual fund could be from 10% to 15%. This we actually know from the past record. And in the case of the government, we know that this government is giving us guarantee that this kind of return on your investments will be there. But so does not happen when we have to invest in a company. Friends, what happens, supposing, this is the company of the same sector or the companies of the different sectors, you can explore the possibility of investment. Supposing there is a company where 100 crore actually has been invested only by the promoter and there is no loan part on in this, the net profit is 15 crore. So we say that ROI will be net profit divided by the investment, total amount invested, into 100 to take out the percentage point. So 15% is ROI, and in this case is 100 crore investment, 10 crore profit, and ROI is 10%. Friends, in this case actually we can clearly make it out that we need to invest here in this company or in this sector. Fine. But the equation actually changes when you take the loan. This actually we really have to understand here. Supposing in this company or sector a particular company has taken out of 100 crore, 20 crore is the loan which has been taken at 10% annual interest. So that means company is required to pay 2 crore rupees every year as a profit. So net profit will be 15 minus 2 crore, that means 13 crore. If you take the percentage of this will be 13%. Similarly, in the sector B, the loan amount is 20 crore at 18%. Maybe some steel company or maybe some mining company or maybe some aviation where the company has to take lot of where the interest rates are high. So on 20 crore, 18% is the interest amount. That means 3.6 crore the company is required to pay, is liable to pay every year. So 10 crore minus 3.6 crore is 6.4 crore is the net profit. If you take it in the percentage term, it will be 6.4%. Now within the two companies or within the two sectors, we can very easily say that we should invest here and we should not invest in the sector B or the company B if it is in the same sector. Friends, actually we are talking, of the Asian paint and varnish industry, and in here we see Asian Paint and Berger Paint. We have already seen book value, price to book value, EPS, PE ratio, DE ratio, and today we will be checking on return on investment. Friends, in Asian Paints, the return of investment is 28.14, whereas in Berger Paint the return on investment is 24%. So now it very clearly shows that 28.14% we should actually invest here. So ROI 28.14 is better. This is the best amongst best in investment while thinking of investment between the same companies. Friends, here I have got a research report of Harvard Business Review. This Harvard Business Review, this magazine is the last word in the management studies, especially in the economics. This actually, the report is of 4th April 2016, and the issue is July and August. That means this month, this is the latest issue. In this issue, the author has studied, had given some refresher on return on assets and return on equity. This we will, on the both the parameters we will be checking on the subsequent video. But friends, one thing very fine he has said about ROI. He said that people check, all the parameters, but I am quoting from the magazine. In the broadest sense, says King, it is ultimate the ROI. It tells you what percentage of every dollar invested in the business was returned to you as a profit. So this is actually the last line. That is, you have made an investment and what returns you are getting is the last word, while making an investment according to this. But this article also says that this ROI does not mean that you should not check with the other parameters like what we have discussed here. Fine. So check all parameters. But yes, this parameter has the maximum weightage in the long-term investment. Fine. So friends, I would like to tell you that whenever you want to make a long-term investment to win the ultimate game, you should know actually the fundamental analysis. If you know the fundamental analysis, quite likely that in the long-term investment will be very purposeful. Friends, I would like to tell you, in the share market, if the results of a company are bad for 2 years, please come out of the investment. Are you understanding what I am telling you? If the results of 2 quarters successively are bad, please come out of the company or the sector wherever you have invested immediately, because then the future becomes little uncertain, and make your investment on a better company or on a better sector. Friends, if you like the video, please press the like button. Please subscribe my channel, and also please press the notification button on the video as well as in your mobile to get my notifications. Friends, thank you very much. Don't forget, ROI is one of the major factor in determining your investments. Be safe, always win, and consider ROI as a final shot. Thank you very much and have a nice day.